All right, good morning, everyone. It is 9:02 on the morning of November 30th, 2022, and this is my pre-market strategy session. So, welcome to the last day of November. Well, it'll probably be a pretty quiet day, in my opinion. What we have, this is the big picture here. You can see that we are in a downtrend. This is the monthly chart on the Qs, the QQQ. And let's see, since December of 2021, we've had rather significant down moves in the market. And there is a little bit of a case for this to move up for about a month or so, or even 2 or 3 months actually. Typically, the bullish times of the year are December, January, February, and March. March, it starts to get kind of quiet, usually starts to get kind of quiet in March. However, we'll see what happens this go around. I mean, history is no, real great predictor. It's just all a matter of probabilities. But the probability of things moving up over the next 3 months are high. So, yeah, here's the big picture. Here we have this. It's not a support and resistance line. This is a trend line down here in the bottom. It's the neckline to a head and shoulders pattern. And then here we have this kind of top resistance line, and that is a support and resistance line. And well, let's kind of get into where we are today. What's going on today? And let me put a few lines on this thing. So, yeah, 284. I don't think that's going to be in play until possibly next week. Here we have, this 280 area makes sense. It's been an area of support here. Let me kind of keep clicking through. Okay, 276. Yeah, 276 is an important area. And 267. Let's see, where is 267? That one's not. Where are you? There it is down there. Yeah, 267. I think 267 comes into play sooner rather than later. 293, yeah, I'll just erase 293. I'll get rid of that one. And then actually, let me go back to the monthly chart and we'll take a look at this Fibonacci on the monthly chart here. And so that's the fib. Now this Fibonacci goes, wow, all the way back to 2002. I put this Fibonacci on. And so it came up, and in this pullback, it tested the 38.2 Fibonacci, or the 61.8, however you want to look at it, and has found support there. And it's really quite possible over the next 12 to 16 months that we see it break down below that 38.2. This is a 75% level right here, this 311.66. And the reason I used 75 rather than the Fibonacci is that 75% even seems kind of more applicable. It seems to work better than whatever the Fibonacci was at that level. I've forgotten. 72 something? I don't remember. So yeah, that's kind of the big picture. So today, intraday here, 267.10, yeah, 267.76. Yeah, that price range right there. I don't know if it happens today or not, but I have a feeling that in December we'll see this level tested. I hope it's a successful test. I hope it hits that level and then we drive up for the next few months. We could use a nice bullish run here to set us up for the next leg down, which I think is going to happen. What we start getting in January, we start getting earnings reports, and earnings are supposed to come in, low, so below expectations. As of right now, let me take this off of that's the 10 minute. Let me go to the daily here. Change this to daily. And so we have this zone right in here of where price is consolidating. And so it's popped up and is consolidated. And usually, when you get something like a bull flag like this, the price action will exit this pattern in the same direction that it entered the pattern. I think this is going to be different this time around, just in the short term. I think that we're getting ready to see another pullback and see this 267 area tested again, and then a move forward, and then a bull move up. So I think within the next 2 weeks or so, we ought to see that bearish price action play out, and then we'll see the top line support and resistance right here get tested, but not until after a pullback, just because there's a gap. Usually I don't, the only time I don't really usually pay too much attention to gaps. Well, that's not true. I love gap trades. It's just with the market that's really so unpredictable, which it is right now, the probability of hitting the gap is high. And so really I'm looking for a breakdown below this level here, 276, and that'll put us well on our way to filling that gap. So for the time being, the price action on a short-term basis, on like an intraday basis, this 280.70 is a good spot to look for support and resistance. So there's a lot going on. And it ought to be interesting. Here's the yield curve inversion. Got a little bit of support here on the yield curve in the past few days, right at that negative 0.78 roughly. We ought to see this thing continue downward, which is going to be crazy because this is a record. We're in record territory for at least the past roughly 40 years. 34 years, going on 35 years. And so the longer and deeper this yield curve goes, the more severe the recession will be coming up. Things are not looking good. In the short term, though, we can have a bull run in the short term, and it's not until this yield curve really starts to normalize that we see all of the craziness on the market. Here's the monthly chart on the 10-2 spread. Here's prior to the 2001 crash, the dot-com bubble. The yield curve was inverted for about a year, and prior to the housing crash, banking great financial crisis, the yield curve was inverted for about 18 months. And so here we are now, it's you can see it's accelerated to the downside. Here's the zero line. So right now the 2 year is yielding 762 more basis points than the 10-year. So there's definitely a flight to safety that's happening. And the flight to safety, the 10-year, is usually the most investors look to the 10-year most often for safety. So for today, I am basically bearish and looking for bearish opportunities until we hit this 267.66, roughly $267. I really am looking for the gap to fill sooner rather than later, just because there's so much volatility in the market. Speaking of volatility, here's the VIX. The VIX is showing a possibility of a new higher low. Here we have October of 21, December of 21, April of 22, August of 22, and here we are, November of 22. If what I think is going to happen is that we're going to get another little spurt of volatility here to bring us down into this 260, into these support levels, and then I imagine we'll see the VIX start breaking down to just kind of throw everybody off. There'll be a nice bull run to bring in all of the longs into the market, and then it'll come crashing down. I imagine sometime around January, the end of January of next year. All right, everybody. That is my pre-market strategy session. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. Thanks for tuning in. I am out.